Hello ladies and gentlemen, and welcome back. In today's video, we discuss markets around the world, but more importantly, the key levels that you need to be watching right now. The golden pocket has been reached on gold, SP 500, NASDAQ, and others. This level between the 61.8 and 66 fib is kind of rare to happen, and when it does, we need to be paying attention. The more important thing about this though is oversold territory. We've got some amazing key level indicators to show us that maybe dumb money is getting a little bit too bearish at this stage. So will we have the kangaroo market for September, the weakest month of the year? Will the market return and then move down, or is it just going to keep going down at the trajectory it currently is? Join us as we try to answer that question. Stay tuned. Well, welcome back everybody to the Daily Show where we discuss stocks, commodities, and cryptos. If you like any of those markets, please remember to subscribe, and we'll be leading up with the key macro and big information, then the lead indicators, the four handle almost being seen now on interest rates in the US, and the lead indicators that are pointing towards some key levels being met. A significant number of stocks are now currently oversold on the S&P 500, and we've reached the stochastic threshold level of 73%. This means that realistically stocks are entering a period that we can start to use statistical analysis to maybe help us with an idea or a plausibility between a bounce or, of course, a sell-off. So when we usually see this type of indicator occur, it's usually in these types of diabolical market conditions. That is, markets that are very, very aggressive on the sell side. And when that does happen, we can start to lead into some indicators. Now, if we look at the 1 week, 2 week, 1 month process, it kind of says here that there could be a small bounce coming, and we have to be open to that idea. We're at key levels of support with an oversold reading. Does that mean that we instantly go, oh yes, what a great place to buy? Well, of course, no, it doesn't. But what it can do is it can be brought along with other concepts. Another thing that we've used in the past on this channel is, of course, the composite washout model signal. And this is giving us a count towards the idea of potentially a small rally. It did certainly help quite a lot in previous times when we saw it really hitting these levels back in the period of June and July, and it's now starting to show it again. So does this mean that dumb money versus smart money are disagreeing? A lot of people have turned bearish. We've shown the big kind of, I guess you would say, surveys that are coming out from the retail crowd, and over 45 to 50% of retail traders are now heavily bearish and very few are heavily bullish. This usually means that dumb money versus smart money is disagreeing with each other. And we talk about this indicator all the time. Dumb money, very bearish. Smart money, starting to turn up, and they've been buying this dip so far. Now, of course, they've been wrong so far, but they may want to push it up. So will smart money or Wall Street actually move the market up against all of this very negative news? And of course, the news coming out right now is very negative. We've got another big story that, of course, we've discussed here on the channel, the COVID-19 lockdowns in China. Remember, the Fed is kind of killing demand by raising rates. So are central banks around the world. But at the same time, we have supply chain shock issues coming potentially back through in China. 20.9 million people are now locked down. Remember, this was a huge catalyst for sell-off back in April and May, but it didn't happen straight away. So we saw all these lockdowns starting and occurring, and then they continued to happen. And we saw that big spike in, of course, the COVID number. If this does continue to happen, it could be a big catalyst towards the markets going down further, and more importantly, interest rates going up more in the US in terms of the forward rates. We'll show you how to find those very soon. How do we know possibly the bear market is over? Well, a good indicator has always been the 200-day moving average. We've talked about this one quite a lot. We hit it to an absolute perfection only a few weeks ago, and it helped us to design or really kind of create that strategy, which was to the bear side, which is where we are right now. But at this point in the future, will you pay attention to the 200? I think we have to. The 200 has been a great lead in previous pullbacks to when we've moved above it, that being a pretty decent zone to pick up markets. Now, of course, there's always an exception to the rule. Here and here were certainly very bad, but if you can stack it with other reasons, it can help you to make better decisions. Let's get into the charts now, and we'll start off here with the VIX, the volatility index, and you'll notice straight away the VIX back to almost 27 on the reading. A new high for the last session with a new low in the S&P 500 during that time. Does it tell us much? Not really. We're neither near, of course, kind of like the greedy area of being in 20, and we're certainly not at the maximum fear level yet of being around that kind of 35 plus on the VIX, usually correlated with extreme highs and extreme lows. The US 10-year though has been going up. So these interest rates are starting to get pretty high. US 10-year at 3.35 versus, of course, things like the 5-year at 3.45 and the 2-year at 3.5. So the 2 years on a new high, the 10 years catching up very quickly. And the biggest, most interesting thing is what's happening with the forward yields. Here is the yield for April of 2023. We're almost at 4%. Now, if this ends up coming to fruition, it's kind of the worst case that a lot of people are looking at. Now, we've long speculated that the US cannot push interest rates past 5%, as it would basically be the straw that breaks the entire monetary policies back. Of course, the Fed would be pushing rates so high that the US government and other governments around the world may struggle to even repay their own debts. But 4%, this is a huge level, and it's something that we will need to be watching. Let's move over to the US dollar. What's happening there? Well, with rates, forward rates rising, we're seeing strong US dollar. It makes perfect sense. If you start to see yields and the forward projections start to fall, then it would make sense that the US dollar will also weaken at the same time. Let's take a look at this 4 hour though. Notice the rejections that have come off this zone so far. 2 rejections off this zone, a new spike, and it hasn't actually closed above this area. Now, what's more important is the commodities against the US dollar and how they're holding. So let's actually scroll over here to gold. Gold's in the golden pocket. What a great time for it. So of course it's pulled back now after reaching some seriously big levels. We've gone over here and we've gone to basically the 1726. Now, this was a huge level of supply. There was a lot of previous support becomes resistance, but also previous supply. And the market hit that and rejected it. Remember, in our previous videos, we've discussed the idea that this was the critical zone that we wanted to see the market take and then pull back to allow bullish entry. Well, we're very close to basically the zone that most people will be focusing on. I think a lot of the bigger traders will be looking at this level and saying, if they're committed towards gold, they've kind of got to start to think about that commitment now from a technical perspective. The golden pocket, a movement up to supply, a break of the previous 1710, 1711 zone. All of this is pointing towards a little bit more strength coming through. If we go to the daily, you can see that we're also at a critical level of previous supports being found through all of those other zones in the past. It's similar to US oil. US oil is at cracking point. You'll notice here 86.74 a barrel. Now, I'm kind of weak on oil over the longer term. That is the next 3 to 6 or even 12 months. I've said that all the way since really 125 a barrel, and it's at 86. Do I like this level? Well, you can argue that it's support, and if you believe the US dollar is about to weaken or something like that will happen, which we have no indication really yet that it has, then you might like oil at this zone. I think I would like it to break through these levels first, as in like create some kind of doubling bottom strategy to go towards the long. But at this point, it's at key support, and this is the 3rd or 4th test of this level. So we'll see how that works. Let's move over to the stocks now though. And the first up one is Tesla. Well, Tesla actually closed relatively strongly, 1.56% up, with a little bullish hammer in the previous session. And what this shows you is the rest of the market was weak, but Tesla managed to hold the low. And that's a really big thing, because of course, if it gets follow through in the next session, that could really push Tesla to potentially creating a little double bottom underneath that overall larger range that's here. Now, we still have the gap under here I think we need to be very wary of in the future. And even any rallies that may happen here in stocks, there's a good chance that there's a sell-off coming sometime later. Remember, we're at the beginning of the worst month of the year, being September. But Tesla, on the small time frames, is starting to look a little bit like a potential turnaround. Key levels in the next kind of day will be somewhere around this kind of 280 zone, and you'll want to see a new high being formed above 276. Let's move over to the DAX and have a look at that one. Well, of course, the DAX is on technical support. This is good because it's going to coincide with all the other markets we look at soon. The DAX is moving to that 12,500, previous support or demand, and we're back in there at this stage. Now the DAX isn't giving us the good indication, but the other markets are. And this is where things get really interesting. Golden pockets everywhere, guys. This is the one. So we've got here resistances. We've got, of course, the 61.8, 66 fib of the entire move so far. And all of these zones coincide with so many key points. It doesn't mean the markets have to hold. Of course, they could fall straight through it. That's the nature of markets. They can do so. But we're about to see whether it can do it most likely in the next 24 to 48 hours of trade. And we'll explain why when we look at the SP 500 from a technical level. But Exhibit 1 will be the Russell 2000 on that golden pocket. Let's have a look now at the NASDAQ. Again, a very interesting zone. Still net bearish, of course, the trend is down, there's no doubt. But we're hitting a zone of previous resistance, previous demand or support, and again, the golden ratio here, the golden pocket, 61.8 to the 66, a very important zone for these markets. And really a weakness here could push us all the way back down to these previous demand zones around 11,500. So you're really looking at a fairly significant drop should the markets actually be able to falter here and go through. Let's have a look at the smaller time frames now for something like the NASDAQ. And what you'll notice is that when we actually zoom it out, it's kind of made a new low underneath that 12,000. We ended up going down to 11,930, and we haven't quite rallied above this level here. This is what was formed on the Monday side of the market, or the Tuesday side of the market in this case, 12,200-ish zone. Interesting. If the market comes above that, you would suspect it comes back down into this very key area and then finds bullishness. And that's how close we are. We're on like that knife's edge of bullish versus bearish kind of tensions. The market currently, you could argue, is making like a little tight kind of pennant here or symmetrical triangle. Maybe a breakout would be a good sign for the markets in general. And a breakdown, well, that's not going to be too good. It really needs to find support pretty much here. Otherwise, there's further weakness that could certainly be coming through. Again, the SP 500 showing us the signs of previous resistance, previous support, the golden pocket, all sorts of things going on here. And the small time frames will again show us a very similar story. And this usually is the better one. The S&P 500 leads the way. And if you like the Russell, the Dow, or of course the NASDAQ, then you can follow along with that. 39.60. A break above, a pull back down to something like a 39.30, and of course a movement up. Can this technically happen? Well, if it does point towards a potential little bit of a pivot shift for the US stock market. And of course, that's going to be so important for traders out there, because when we look at these markets, we've been in a fairly significant sell-off now for basically about almost 2 to 3 weeks now. Up here, beautiful 200 MA. Of course, we had so many great reasons to be shorting up here. And every time we've taken out these key levels, we've moved down to the next one. Now that we're at this level though, could we rally? Well, if we rally heavily, the next rally points could be all the way upwards of 40.90 or even 41.25, which just so happens to be one of the most important levels through this entire market condition. So 41.25 is going to be a big one. Follow along on Twitter as well. I have been posting a little bit there with some key levels, at least technical levels, to be looking at for the week ahead. And you'll see them over on our Twitter handle at FX Evolution. How does this work with the current put or call walls though? Do we have any inklings that the options market is helping us out? Well, firstly, it's not a third week expiration. It's not a key options expiration. So therefore the options volumes are down quite a lot. 70,000 isn't something that's very interesting. But coming into Friday, technically the max pain would be at 400. It's currently trading well below that. Of course, stock price at the end of the close is around 390.69. So there is a really good chance here that the next couple of days bring us a rally. Options are kind of pointing towards that side of things. And if the markets do indulge that, then there's a real chance that these markets do go back up. Of course, with the S&P 500, if we fail at these levels and we can't hold that kind of golden pocket range, the next area could be as low as 37.50. So we've got to be very open to the downside as well as the bullish side. It's going to be a trader's market here over the next month. Kangaroo style could be the way we're looking. Bitcoin is kind of front loading the weakness. So if the rest of the markets are anything to go off, Bitcoin is incredibly weak right now. 18,862. It's taking out all of these liquidity areas here. It could seriously bounce if the stock markets do well. But of course, underneath this low here, this very dangerous level. If we end up getting underneath that zone, and that equals around 17,600-ish, you've got to look out below. I've long thought about this for Bitcoin, and whether we're obviously in a crypto winter, but whether we can make it back down to some very key levels, the 11,000 or even the 9,500 zones. And if we get under 17.5 or 17-ish 6, anything's possible, and you've got to really look at timing. Crypto can fail even when the rest of the market's doing well. So this is a pretty weak looking market. For some people, they're going to see this as an opportunity to look for quick reversals, and it could be there in the next 24 hours. I think crypto is going to be wild over the next couple of days. It certainly looks like it will be. For the next couple of days, there's big economic news. As always, there is. There's nothing we can really do about that. Thursday, September 8th, we've got ECB press conference, and then we have Fed Chair Powell coming out as well, not soon afterwards. So basically, we've got two big bits of data. We'll find out whether this is going to move these markets, and then leading into the end of the week, we've also got some employment and unemployment numbers coming out for CAD. So it's going to be a pretty big week, but realistically, it's just a big week because we have a monstrous support. Can it hold? Can the bulls get through? We'll find out. As we said, follow us at FX Evolution. Join our Discord community if you're interested as well. Free 7-day trial for the private, or of course the public. We have that with over 10,000 members in there, so come and join the community. And as always, we'll be a little bit patchy this week as I am on my honeymoon at the moment, but we'll be banking content when necessary. So thanks so much for supporting the channel. Subscribe if you enjoy the content. Give it a like, and we'll see you in the next one. Bye for now.